Importing your Xero data into Dryrun only takes a couple of minutes. To get started, click on the Import Data button next to the scenario title. Next, click New Connection and select Xero. You'll be guided to the Xero website, where it'll ask you to log in and give authorization to connect your Xero file to Dryrun. Once you've approved Xero to allow access to your file, you'll be taken to the screen that will confirm that your connection was successful. Next, click Import Settings on the bottom right corner of your screen. On this first screen, you'll be prompted to select the bank accounts that you want to use for the opening balance on your file. You also have access to your assets, liabilities, and equity accounts as well. Next, click on Account Mapping in the bottom right corner of your screen. The first step is to decide if you want to bring in all of your income accounts. You can exclude any of the accounts you don't need in your forecast by clicking on the toggle next to the account in the far right column. Now click on the Expense tab. Likewise, in the expense area, you can toggle off any accounts you don't require in your forecast. But there's another step to take. You can map each account to one of two sections in Dryrun. By default, all of your accounts will go into the recurring section, which is a great place for those regular expenses that happen every month. But you also have the option of mapping accounts to the cash out section. And this is a great place to put accounts that generally have large one-off bills, because you'll likely forecast them in a different way than your regular repeating expenses. We often see the cash out section used for cost of goods sold. So I'm going to map all of my cost of goods accounts to the cash out section with the drop-down menu next to the account. You also have access to your assets, liabilities, and equity in this section as well. Next, click on Auto Forecast in the bottom right of your screen. Here you can select the mode of auto forecast you'd like to use for each of your sections: cash in, cash out, and recurring. You can see here by default that we recommend using Map to Last Year as the option for cash in and cash out. Mapping to last year will help you pick up things like seasonality or peaks and valleys that are typically hitting your business every year. For the recurring section, we recommend using Map to Recent Month as the mode of your auto forecast. It will simply go back a couple of months, look at your regular expenses, and build a forecast based on that data. You also have the option of mapping to the yearly average, or simply toggling off auto forecast for any of the sections that you decide you want to build manually, or in the case of cash in, you may want to connect it to your CRM. Click Finish Up on the bottom right, and you'll be brought to the Sync Data screen. Here's what will show you all the things we're bringing into your account from Xero. Simply click Sync and we'll do the rest. Now that your Xero data has been brought into Dryrun, let's take a look at what's been imported. First, if we expand the Cash In section, you'll see the invoices that are owed to your business, including these ones marked in red that are overdue. You also see the accounts that we've auto forecasted in blue. And the Cash Out section is similar. You'll see the bills that are overdue and the ones that you need to pay, and all of the accounts that we mapped to cash out, auto forecasted again based on last year. And in the recurring section, you'll see that we've built a forecast based on that recent month. This is a great starting point for your forecast that you can get in, change, customize, and adjust any way you'd like to see exactly where your business is headed. If you have any questions, please connect with us in chat.